Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. This is Property Analyzer Week, it seems like, because that's what we're doing. We're analyzing properties. Market seems to be hitting, well, I mean, everybody seems to be calling me either they want to buy or sell properties, which is obviously a good thing. We'll take that. So we have another property we listed in Hamilton, Ontario. It is a legal triplex in the east end of Hamilton. It's on Britannia Road again. If you guys are looking and you're working with a realtor, definitely go and hit them up. It's a legal triplex. We're listing for $499,000. It was listed yesterday. We're accepting offers on Monday. So go ahead, bring those offers. Go check it out. If you guys want to have a look, let us know. If you're not currently working with a realtor, we can definitely get you through. All right, so we're going to go through the numbers on Britannia, this legal triplex as is, and then after repair value, because it does need some work. It's at current condition. If you guys like these videos, definitely smash that like button for the YouTube algorithm. I know that when I ask you guys that you actually smash it, so I appreciate it. It really does help out the channel. And if you haven't, please subscribe, turn on that notification bell. Also, we got the new premium perks package going on for $8.99 a month, where you get a copy of the Property Analyzer, where I put up analyzed deals every week. Also, we're going to do a live session with Mikey Ulano, where we go through the stock charts on there as well. So if you guys like that stuff, definitely go ahead and get in there, and we'll get that going. All right, so again, we talked about this. It's a legal triplex. We did $499,900, so let's just call it $500,000. We're going to probably be aiming to get an 80% first because it's a residential mortgage. We're going to get residential financing on that. Again, because we live in the great province of Ontario, we pay our land transfer tax. So immediate repairs and renovations. So the building is actually in decent condition, yet the units do need to be upgraded. So we're going to say there's probably about $80,000 needed to renovate that property. If you want to get an inspection, it's probably going to cost you about $400. Appraisal, depending on which banking institution you're going with, you may or may not have to pay for it. I know I use RBC a lot for my residential stuff, and they don't charge. No financing costs, again, because it's a residential property. Legal costs are about $1,500. So our total investment is about $188,300. I have the annual rents on this, $34872, $2906 a month, and then I have utilities again. So about $650 a month in utilities, and then we have taxes, $3281.58. And insurance is $1,950. So we always include property management and repairs and maintenance at 5%. And then we have a 2% vacancy on this. We can see that that's a 3.5 cap from right now. Do caps really matter when I'm buying residential property? Yes and no. It's going to be based on comparable properties in the area for refinancing. You know, you're going to probably get about 1.9% rate. So you are going to be slightly negative cash flow buying this at the asking price of $499 right now. We all know that we're not buying it for today's value. We're going to buy it to add value to it, correct? To create a BRRRR. Basically what this is there's a main floor 2-bedroom, a second floor 2-bedroom, and a third floor 1-bedroom. You could put a basement apartment in, except you'd have to lower the basement. The ceiling height isn't enough. So that would obviously, underpinning would cost a lot of money. It's a detached home on a big corner lot. So it definitely could be done. So we went ahead and bought that for $499. Our mortgage is $399,920. Our down payment was obviously the difference, but $99,980. Our land transfer tax, $6,473. I think we said $80,000. Obviously, that's going to go up if you are going to do the basement. And I think that's definitely a high number for me, but that's definitely reasonable for what everybody could get done. $400 for the appraisal. $1,500 in legals. Monthly rent on this was $2,906. That means I'm getting less than $1,000 a month, so I'm basically $966 a month in my gross rents. So again, in this area, we're getting about, I'd say $1,550 on a 2-bedroom unit. We're probably getting a little bit more. I do like to be conservative. I know that, like, when we had Josh on, like on a 2-bedroom unit in probably not as nice an area of town, I mean, they were getting $1,700. So you can definitely get more rent than this, yet I do like to be conservative. And then on the 1-bedroom, we'll say about $1,400. So well, we'll say 4,500. And listen, if you go ahead and you renovate this and you make this super nice and you get that to $5,200, I don't think you're going to come back to me and say, hey, Mark, you're a liar. I didn't get $4,500. I only got $5,200. So this is why I do this, just to be conservative and all that fun stuff. Now we have 4,500 and we put in our utility costs. The taxes were 3,281 and the insurance was 1,950. Now our cash flow, obviously, because we don't have any mortgage in there yet, so we have to come up here and do an after repair value. So if we had this, we bought this at $500,000, we're in for 580, and we went ahead and we're going to refinance this. There's been legal triplexes selling in the area between 650 to 750. If you make this super nice, you know, let's just be conservative and say you get 725. And we're going to go ahead and get an 80% mortgage on that. I didn't even know what that was going to come out to, but that's a 4.75 cap. It cash flows $320 monthly. So this is my worst case scenario rents, where I'm getting, you know, what I think are bargain rents. If I go ahead and get 5,200, or, you know, even if I get 4,800 or something like that, it just adds to how much I'm getting, right? So I'm not getting $300 a month, and this is after repairs and maintenance, vacancy, obviously mortgage, everything included in there. So I'm getting $300 a month cash flow. Yeah, and then so my first mortgage payment, you know, I'm at 1.9 here, 1.79. I mean, I'm probably going to get that on a thing. Let's even say 2.1. So I'm $230 a month. Let's just call it 2.1, because I know that sometimes investors aren't the best at getting financed. So, and it's an investment property. So we'll run through the numbers real quick. So I'm getting $725,000 on a new appraisal, $580,000 first mortgage. So we pay off our existing first mortgage of $400,000. We pay back our money to the down payment, the land transfer tax, the immediate repairs and renovations, all of our costs involved. Actually, we're going to add another $1,000 in legal costs. Basically, our total investment was $188,000, and we're getting back $180,000. We would have $8,273 left in the property, with capital of $145,000 remaining in that property. So, I mean, you guys tell me, you guys think this is a deal or not? I mean, it looks like a decent deal to me. To try to buy a legal triplex, you know, if you could go ahead and take do the renovations for $60,000 instead of $80,000, obviously then you're going to do a full BRRRR out finance. I know when we talked to Mandy Branham the other day, she says when she looks to do her BRRRRs, she looks only to get the immediate renovation money back. So when she pitches her investors, this is what she's talking about. Obviously, that you're getting a lot more on this one than, you know, just your initial construction cost back. You're getting everything but basically your land transfer tax and your legal cost back. Let me ask you this. If you could buy this property at $725,000 for only $8,000 down and cash flow a couple $100 a month, would you do it? Right? Because at $725 a month with that cash flow, you're getting, let's call it a 4% price appreciation in Hamilton. On a $500 and something thousand mortgage, you're probably going to have about $5,000 a year in pay down right off the beginning. So this is your first year cash return is $4,600. You're getting a mortgage pay down of $5,000. You're getting appreciation of $29,000 on that property for a total return of 26.45%. If you went ahead and bought that property at $725,000 and only put $8,000 down, you're basically laughing. Like, this is no brainer, done deal. I'm going to make 26.45%. This is on if I had to put the full down payment, not if I only had to put $8,000, right? That's on the 145 plus the 146. That's my return. If I went ahead and just did this, watch, let's do some fancy stuff. 19%, right? We'll call it 0. So we do that. Now your return is 470%. So that's, you're getting a 470% return on your $8,000. That's not even including the return you get on for creating $145,000 in capital already. So this is another example of turning your initial investment of $188,000, what's that? Almost $320,000. So when people talk to me about wealth building and that type of thing, and I talk to them about, hey, active real estate investing is the best way to grow your wealth, because I mean, you can go in and you can do this property, you can have it turned in 6 to 8 months. You don't have to rezone it, you don't have to get any minor variances. You might have to get permits to do the construction, but it's just cosmetic stuff that you're probably doing. Maybe you move a wall, maybe you don't, but you're not going ahead and you're not applying to take a 1 unit to a 3 unit, right? This is already a legal triplex. So anyways, guys, thanks so much for watching. Smash the like button for the YouTube algorithm, turn on that notification bell, and definitely check out our perks section down below. All right, guys, have a great one. We'll see you next time.